RBA not moving, does that mean the banks might have to?
Well, we're all shocked, of course, when interest rates were on hold.
I can see the surprise on your face.
I mean, it was an outside chance.
I know you weren't expecting that.
Sometimes outsiders come in. But no, in all seriousness, we've now had a lengthy period with rates on hold. In fact, it's a record period of stable rates under the current Reserve Bank rate setting regime. I think we will see the same outcome for the foreseeable future. Certainly this year, I believe, the Reserve Bank's indicated that. We don't want to discount, and this might come as a real shock, the possibility that the next move would be down. We've got GDP data out tomorrow. I think that might actually surprise on the downside. The expectations of growth are around about 0.6% over the December quarter. But some, I guess, analysts are predicting perhaps as low as 0.4% growth over the December quarter, which is quite low, and it just reinforces the stagnation of the economy. And there's a few other bits and pieces that are starting to work their way into the equation as they do. One of them, of course, is our friend Mr. Trump in the US is now talking about tariffs on trade, which is a bit back to the future in terms of economic modelling and policies. And, the spectre of a trade war, Australia is a trading country, of course, and our dollar is, I guess, too high for a lot of our traded goods sectors anyway. And it would be a real uncertain environment if we did start to have to confront tariffs in terms of barriers to our products in overseas markets such as the US. So again, if that did occur and had an impact on us in terms of our economic output, the lever that would be, I guess, the first to be pulled would be interest rates coming down to try to get our dollar down to be competitive in that type of a trade war environment. I'm not saying this will happen, but certainly it's, I guess, an outlier that's come into the I guess, debate or analysis in terms of where interest rates are going. So this is the nature of economics, of course, is that these things can come and impact the macro economy. So don't discount the possibility, outside chance, of course, that the next cut will be downwards. But I think really the outlook is for steady rates. And I think that even though we've had this long period of steady rates through the Reserve Bank, we haven't actually had steady mortgage rates because we've had changes in mortgage rates, which started in 2015 with macroprudential policies from APRA, who were concerned about overheating investment markets. And we had that revisited last year, where APRA again moved into the marketplace through the banking sector to dissuade, I guess, investors or to try to moderate investor activity with higher rates. Now, APRA have indicated that they're pretty happy, I think, with the way things have panned out. We know that housing markets, particularly Sydney, the heat's come out of those markets. That was what our auction clearance rates told us on the weekend again. So I think that they'll want to sit on the sidelines, or will sit on the sidelines this year. So in a way, we will have a stable interest rate environment this year, and that's mortgage rates from the regulator as well as official rates. And we're already starting to see, Sophie, some signs of competitive juices flowing in our banking sector. Announcements last week that fixed rates were coming down. Probably not good news for those that have speculated on rates rising in the near future and have locked in rates, but this, of course, reinforces probably the most prudent policy for mortgage holders is to go for a longer-term variable rate. The banks are certainly very competitive at the moment. I think the banks are also looking to recover their volume of lending given the shakeout in investor lending last year. So rates on hold, but it's still a good market environment if you're out there looking for a mortgage. And of course, it looks like, are we now seeing the approach of a buyer's market, heaven forbid? Well,
on that subject, let's have a look at the auction clearance rates from the weekend. Significantly down on the previous week.
It was a little bit of a surprise. We've been tracking Sydney and Melbourne around about that 70% clearance rate. 7 out of 10 chance of selling your property under the hammer on a Saturday is pretty good odds if you're a vendor. It's sort of as things can, I guess, come out. We saw the clearance rate down sharply, 62.6% in Sydney and 65.6% in Melbourne, and that was the lowest clearance rate for a month in Sydney. And the only lower one was for the weekend opener, which was only had small numbers, and it was the lowest this year so far for the Melbourne market. So, look, it's certainly starting to get a look. Once we move below 65% clearance rates, it really does start working in favour of the buyer. It does show that there's less competition for properties. It certainly means downward pressure on prices, certainly a flattening of prices growth. But I do hesitate to, call a buyer's market at the moment, or, look at last weekend's results as being a significant outcome, because something else that was interesting last weekend, we had high auction numbers again, over 800 auctions in Sydney and over 1,300 in Melbourne.
We've got the auction listings, but we'll only look at that briefly because I want to skip on to the region by region weekend results, and we can look at Sydney first for that one. This is really interesting, isn't it? Just the huge variation between the outer suburbs and the more prestigious suburbs.
Well, look again, there was this consistency with the regional results in Sydney. It was down across the board. In fact, we only had 2 regions which had clearance rates above 70%, and they were just above 70%, and they were the lower north and the city and eastern suburbs, were traditionally strong auction markets anyway. But it's been those inner suburban, higher-priced areas that have been the top performers in Sydney really over the last year or so. And even though rates were down, clearance rates were down, they were still at the top of the ladder. But at the other end, of course, we had the southwest again was an underperformer, and it had quite a low clearance rate of just 43%. And that really has been a market that's consistently been, around 50% or lower this year so far. And last year as well, it was a softer market. So those outer suburbs, perhaps price levels are dissuading buyers from being active in those markets, but still the sense of a two-paced market in Sydney, with inner suburbs doing better than others. But everybody was down on the weekend, so,
But is that quite worrying in the western suburbs of Sydney, given that's sort of meant to be where the development is and where the movement that's all going ahead in terms of new airports and new roads and new infrastructure? So is it a concern when that's not responding to the big injection being spent on infrastructure?
Well, absolutely. And I think this reinforces the affordability barriers that have been created in those areas through the early part of the boom. It's very difficult to find any property in Sydney, any house in Sydney under $500,000 now. And medians are, pushing up towards $1 million in a number of suburbs, traditional outer western suburbs. And of course, this still represents very strong barriers to entry for buyers. And I think that's just the price barriers has created a ceiling, a barrier for activity. And of course, those areas are also favoured by investors. They have higher yields, and we have seen investors off the market over the last 12 months, as we discussed previously, with those higher rates. And of course, first home buyers traditionally fuel those markets, and even though they've had a boost with lower stamp duty, the numbers still aren't, anything to get really excited about.
Yeah, look, just before you go, we'll just have a look at the top February auction suburbs.
Yes.
We've got those for Sydney and Melbourne, and that's quite interesting yet again, isn't it, just to see?
Well, no surprise that these are 100% clearance rates, and they're ranked by the number of listings. And we have the suburbs in Sydney are clearly inner suburban areas, and they're dominated by Northern Beaches suburbs. Surrey Hills sort of works its way in there as on the list, but clearly inner suburban areas were the better performers in Sydney over February. No surprise there, higher prices of course. And if we look at Melbourne, it's the reverse. Outer suburbs, Tarneet, down to Muralbark, they were the suburbs that did the best in terms of auction clearance rates. And you can see the big difference in the prices, the median prices between the top performers in Melbourne and the top performers in Sydney. So we sort of had a tale of two cities, of two markets in each city, and we have a tale of two markets in each city, if you understand what I mean. So look,
really
it's going to be very interesting next week. We have the Labor Day long weekend in Melbourne, so numbers will be down. Sydney numbers will be down a little bit, but I do think perhaps these lower clearance rates are a little bit to do with what we've seen, a surge in auction numbers in both Sydney and Melbourne over the last 2 weekends.
All right, always so much to talk about.
It
Thank
is,
you
yes.
so much for your insight. We'll see you again next Monday.
Thank you, Sophie.